Hey guys, how's it going? It's Andy from Magoo Investing. Happy Super Bowl Sunday. Today I wanted to talk about some of the emotions that are involved with trading in the stock market, and specifically this trend that I've been seeing specifically on Wall Street Bets of talking about having diamond hands, because it has been this common phrase that's been thrown out a lot. I'll show what the Google search history for diamond hands looks like, and you can see the recent spike. So in this video, I wanted to talk about what diamond hands mean for people that aren't as familiar with the term. I'm going to give my opinions on it, and then I'm going to finally talk about my own experience about having diamond hands, because this is something that definitely changed my investing experience overall, and is actually the reason why I decided to start this channel, because of my negative experiences with having diamond hands. So I wanted to talk about that in today's video. I also want to say that I have nothing to say negatively against Wall Street Bets as a whole. I think it is a net positive for the investing community. I am a part of Wall Street Bets. I've been a part of it for like 3+ years. I'm a part of Theta Gang, which are the people that sell the options to the people that are buying these ridiculous out of the money options to try to make ridiculous profits from it. So I'm very positive about it, but I've been seeing this worrying trend specifically as these new investors flock to places to find information about the stock market. And Wall Street Bets has become this very popular place to discuss trends in the overall market, specifically with the momentum plays with AMC and Gamestop. So while you can be a part of a group and be critical about it, I do want to say that I have a net positive view about Wall Street Bets as a whole. But before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it with the like and subscribe button, as it would help my channel out a lot. Also, I created a Discord last week. Link will be in the top of the description if you'd like to join that, and to kind of talk to myself and others about the overall stock market. So a little more than a week ago, I made a video talking about the importance of understanding emotions when it comes to the overall stock market, and why I was worried about these new investors that were getting involved with stuff like GameStop, because I had been someone that had gotten involved with day trading, and that's when I first started to realize the importance of emotions. That's why when I talk about people just getting started in the stock market, I always advocate for buying just a single share the first time that you get involved with the stock market, because money is a very emotional thing. You spend a lot of time and effort making this money, so when you see the value of your hard-earned cash going down, it's pretty upsetting at first. And so that's why I always talk about buying one share at a time, just so you can get used to the overall ups and downs of the stock market, because on average the stock market goes up around 10% a year, but it's not, whatever 200 trading days divided by 10%. It's not broken up like that. You have up days, you have down days. And so I think learning about the emotions of how you react to having a down day is very important to understand before you start putting more money on the line. But when we've been seeing a spike in new investors in the past couple weeks, I don't think people have been taking this conservative approach. We definitely saw a boost in the new investors coming to places like Robinhood at the beginning of 2020 when the pandemic first started. But we saw people going towards some risky plays with stuff like the cruise and airline stocks. But for people like myself that feel very comfortable with the overall stock market, I bought into airline stocks and I had a reason behind it. So it's not the most risky thing in the world. And that's how you get to the point during this past summer where retail traders like you and me made up around 25% of the overall trading volume, which is an all-time high. And it's the reason why we've been seeing some interesting changes in the way the stock market has behaved over the past year. And then fast forward to this year, we've been seeing this massive spike in new investors going into the stock market. You can see that as Wall Street Bets from having just below 2 million people on the subreddit to now being above 8 million. You can see that with the increasing downloads of Robinhood, making it the #1 downloaded free app on the App Store. So then you get all these new people getting involved with the stock market because they hear all this talk on social media from their friends talking about how GameStop and AMC, you're sticking it to the man, and it's an easy moneymaker in a once-in-a-lifetime situation. So you get a lot of people that are getting involved with the stock market that have no prior experience and are just getting in because they hear about all of the positives, and they have the FOMO, the fear of missing out on this fantastic opportunity. And so as I mentioned in that video talking about why I was worried for new investors, is the fact that it's all fun and games when people are making money. Everyone looks like a genius when the stock market's going up. You can make a really dumb decision buying into a company that has no reason being as high, but if everything's going up, a rising tide brings up all ships. And so when things are going well, you can make jokes about it. That's why a lot of people were talking about GameStop online. You saw people posting their gains. And then in the past week, I'll put up the 5-day chart for GameStop, and you can see that it's been constantly sliding for the past 5 days, and it has erased a lot of the gains for many people. And I'm sure there are plenty of people that have got involved with GameStop, sold, and got out. But I think it's very interesting to see what has been discussed on places like Wall Street Bets and the discussion of diamond hands. Diamond hands are the idea of holding a position that has been going down with the hopes that it's going to recover in the future. And so this is sometimes a very beneficial thing. Since I've been involved with the public investing app, one of the things I really like is that you can see the other people that have been buying and selling stocks. You can see how long they've been holding it for. I saw some person last week that bought into Microsoft, sold 5 minutes later because they were down 0.5%, and they said that they didn't want to be losing money. That would probably be beneficial to hold for the long term because Microsoft is one of the most stable companies out there. But diamond hands on both sides of the extremes can be positive and negative. For the person that sold Microsoft after 5 minutes, they probably could use diamond hands. For people that are holding on to a company like Gamestop, maybe they bought in the $300 range, now it's down below 100, diamond hands may not be a beneficial thing. And there's a very interesting dynamic change that we've been seeing with the introduction of these online chat rooms, because now there's a definite group mentality to it. In the past, when I was day trading, I was a part of a Discord, and there were a decent amount of people that were holding the same stock that I had. We talked about diamond hands. Back then we called it bag holding. But it was kind of the idea that, eventually this will hopefully recover. But now with the creation of wallstreetbets and how popular it's been, you see so many posts about people saying, hold the line, diamond hands, if you sell, you're letting Wall Street win. And you get this psychological difference that these new people getting involved in the stock market have that I didn't have when I made my big mistakes with the stock market. Because now there's this group mentality and kind of the pressure to hold the line and not sell, because people have been talking on those platforms about if you sell, it's going to hurt other people and it's going to force other people to sell. So you have the emotions going through your head of, oh, I'm losing money. But then if you sell and lock in that loss, then you're going to be hurting other people as well. And you have people keep telling you to hold the line, diamond hands. And I think it's going to be a really negative thing for these new investors that are getting involved. I always talk about the importance of when you take positions in speculative or risky stocks to have a plan, because a plan is the only way to really successfully trade these type of stocks. That's why when I bought in, I sold my options, I made some money, I got out, I didn't think twice about, oh, I missed out, I should buy back in. I made a plan, I stuck to it, and I have no regrets because of that. Most people just bought in, and the jokes that get talked about on Wall Street Bets is, oh, it's going to the moon, and then when there's a dip, it's, oh, I'm going back to Earth to pick up my wife, and then we're going back to the moon. But there's no set plan. So people buy, and the traditional words of wisdom of buy and hold forever doesn't apply to a momentum play. So we have this problem with these new investors where I'm worried that people are going to get involved in the stock market, they're going to lose a lot of money in GameStop, and they don't really understand how the stock market works, and they're going to get pushed away from it and not come back. And so now I want to talk about my experience with diamond hands, or when I had it happen to me, it was called bag holding, and kind of explain the difference between my situation to what we're seeing right now. So overall, the two hardest parts of investing, in my opinion, both have to do with selling. One is for selling at a loss, locking in profits, because there's this level of greed that goes through your head that, oh, if the stock is up now, I made a good decision, it's going to continue to go up. Locking in profits is always a positive thing, and I have to look at it as a positive and not a, oh, maybe I could make more money, because greed is how you lose a lot of your gains. And probably the most difficult thing to do with investing in the stock market is selling at a loss, because one, you have the monetary hit, you're going to be losing money. Two, you have to admit to yourself that the trade that you took was wrong and you made a bad decision. And that's really hard to do. And that's how you get people that get into this cycle of hoping that the price is going to go back up to the level that you bought it. And that's kind of the way that I determine, are you bag holding or are you fine to keep holding? Because if your mentality is just the goal is to get back to break even, you're bag holding. If you have a trade plan and you have this as a possibility that it was going to go down and you have a level that you still think it can reach realistically, then you're still trading that plan. I'm fine with that. But I wanted to talk about the problems before I set up this distinction between bag holding and just trading the plan, because these people that are involved in GameStop are not the only ones that have made a mistake like this. I've done it. And I think being involved with a group to talk about how things are going is a positive thing, which is why I'm going to plug my Discord again, top link in the description. So going back to 2018, I thought I was like the smartest investor out there. I had been involved in the stock market for like 6 months at that point, had been pretty successful trading gold over the summer. Then we get into the fall, and I decide to start getting involved with the natural gas ETFs after following a pretty well-known investing YouTuber. And these are leverage ETFs, meaning that as natural gas prices go up 1%, these leverage ETFs are going to go up and down 3%. So you have UGAS, which is for if the price is going up, and then you have DGAS, which is if the price is going down. And so I aggressively got into DGAS because I saw the price of natural gas get up to a level that I didn't think was sustainable. When I put up the charts for what natural gas prices look like, based off the technicals, it looked like I was probably going to be right. And I was kind of right. As you see, the stock price fell. I should be making a lot of money, right? Wrong. I made a video a couple months ago talking about the dangers of leveraged ETFs, because these are stocks and ETFs that are not meant to be held for the long term because they decay after large movements in price. Even though the price of natural gas went down below where I bought it at, it had decayed by so much that my shares are pretty much worthless. And then you get to the problem of I'll put up what I was holding, which is DGAS, and then I'll put up UGAS, which is the inverse of it, Neither of them make money over the long term. So I get to this point where the stock price decays by so much. I'm down like 75%, and I'm just hoping that maybe the stock price will get back up to the level that I bought it at and I can break even. I got to the point where I was just like, you know what, if it goes to 100% loss, I'm fine with that. And it's just the emotional toll of having this part of your portfolio that's just decreasing in value over time, and it's just so upsetting. And I think that's what a lot of people are going to have with GameStop, because there's this hope, there's this chatter online that hopefully GameStop is going to go back up to the 300, 400 level, maybe even the 1,000 is what people are still hoping for. But realistically, I don't think it's going to get up that high. And people are going to continue to hold this for the hopes that it's going to get back to a break even and they can get out relatively unscathed. And when I decided to finally sell my position, I came out with my ego and my bank account bruised pretty bad. But I learned enough about the stock market and I'd been involved with it for long enough where I was comfortable going back in with a more conservative approach. And that's kind of the reason why I decided to make this channel, because I wanted to teach younger investors the traps that I've seen out there in the stock market of these new investors think that they're the smartest people in the world, they lose some money, and then they get really upset and they go away from the stock market. I wanted to try to avoid having people making the same mistakes that I did. And I'm worried that these GameStop positions are going to result in people staying away from the stock market. The stock market is the most accessible it's ever been. I'm hoping that when people close out their positions on GameStop, they're going to be intrigued enough with the stock market where they'll stick around, because while in the short term, it definitely hurts to lose money, when you compare it to the amount of money you're going to be investing over your lifetime, it's just a drop in the bucket. I lost $750. That sucks. It was a lot of money for me. I shouldn't have been investing that aggressively, but I made the mistake. But when I compare it to how much money I'm going to be investing over my lifetime, it's not as bad. And I think that's a mindset that people have to understand. From what I've been seeing, people have been investing with a lot more than $1,000, so it's going to be more difficult. But I think diamond hands are a problem with these new investors, because all of these people that are talking about diamond hands, holding the line, buying the dip, they have financial incentives to try to promote people to buy back in, because they're also holding shares. And if the stock price goes up, they're going to make money. And so I'm worried that people are going to be pushed away from the stock market from this. And I'm very curious to see what your guys' take on diamond hands are, because it's a very interesting kind of change to the emotional cycle of investing in the stock market. Things are great when the stock market's going up. When it's going down, it's a very lonely place and it's very upsetting. And now you have this increased guilt of if you sell, it's going to hurt other people as well. So the GameStop situation is going to be fascinating to look back on in a couple years, and I'm very curious to hear what your thoughts are in the comment section down below. Thanks for watching this video, and I will see you tomorrow with another video.